everyone. Welcome to another episode of In Conversation by Advisor Coach. Today in conversation, our guest is Mr. Debashish Mohanty, Chief Strategy Officer with the Wealth Company Mutual Fund. Debashish ji, of course, doesn't need any introduction. He's been an industry veteran, as you all know. So, welcome Debashish ji to In Conversation by Advisor Coach today.
Thank you, Suren. It's my pleasure to be part of this conversation.
Thank you so much. Thank you so much. So, Debashish ji, just wanted to check, the Wealth Company Mutual Fund very successfully just closed their 4 new fund offers at the same time. 4 schemes एक साथ,
Yes, sir.
and collectively collected around 2,000 crores, which is a great number. So, how was that experience of launching 4 products? Must have been very hectic, na? And of course, enjoyable at the same time because a lot of travel must have happened, a lot of events must have happened. पूरा भारत दर्शन हो गया होगा.
Right. So the first thing is, for me personally, it's a very pleasurable experience
Hmm.
because I reconnected with people
Hmm.
whom I left 3 years or back. And but mutual fund always a passion, as already completed 37, 38 years, and have grown with the people, seen second generation, third generation of distributors coming, and seen multiple cycles of the business and markets and multiple product regulatory changes. So when reconnected, it gave me much pleasure and also was effective in connecting and for the company. And for funds, let me tell you strategically, we didn't have a strategy or a dream for a huge collection on the first go. It was a debut, and the board's brief to me was, we'll focus on smooth delivery of 4 babies in one labor pain. So 4 products launched first time within 1 month or so of the getting license. We have no branch, no RM even today, and all connections happened from central office by traveling or by digitally or making our presence felt in other manner.
Hmm.
And that
Hmm.
itself did the whatever success we have, it created that. One countable success is 50% of the equity schemes contributions came from B30 cities.
Oh, that's great.
Yeah, we are only couple of people who are traveling. Of course, metros normally give more money, but somehow my past connections and our meetings, our travel, Madhu herself traveled 30, 31 cities. So thus all these things actually brought results from people whom we connected for the first time.
Hmm.
We got around 9,000 plus around 10,000 distributors got empaneled with us.
Hmm.
So we had earlier had a program of offering SIF and other training,
Hmm.
and through that also people got connected, and this empowerment was easier. But empowerment is not the only thing, because people need to understand the product, the organizations, the management, the future, and what is in promise. So that communication through email, WhatsApp, telephonic talk and meetings, that created this much results. We
Hmm.
could have done better, but we didn't have people. And before your second questions come, let me tell you, this is we are part of this industry. I always consider this industry as a cooperative setup, not as a competitive setup. We
Hmm.
have
Hmm.
competition with none. There are various models of distribution. All can coexist. All can sustain. As I see, 96% of this country's populations are still non-investors waiting to be touched by mutual fund people, white spaces around. So it's a pleasure of trying our might and get something. You can ask me further questions. But this P30 contribution was a surprise for me even.
Excellent. Hmm. Very good. Very good. So, Debashish ji, the Wealth Company Mutual Fund is also launching their new fund offer
Yeah,
of the Wealth Company Multi-Asset Allocation Fund on the 19th November and closing on the 3rd December.
yeah.
Could you tell our viewers more about this fund, the Multi-Asset Allocation Fund?
Yeah. So I hope you will do the risk requirement compliance requirements on your from your side, either this thing we are going to talk about the fund.
Hmm.
So multi-asset. In fact, we believe that even common man from their core portfolio 30-35% should be reserved for multi-assets. Why? Multi-asset is doing the asset allocation by fund manager, which is tax efficient, and it's not just combination of multi-assets. It is allocating at the right time, shifting from asset to the asset which is likely to perform better. We all know asset classes are not correlated, or they don't move unidirectionally. There are differences in their pattern of return, giving return. So if you have a combination of multi-assets, some years something will do better than the other. So benefit of multi-assets will be taken. And beyond 30-35%, you allocate resource according to your risk profile, that's fine. But it has also proven our industry category of multi-asset has given good return. And recently, gold has been in signing, and they have added to the returns. Uh, the cycle analyst tells that as long as uncertainties on the world political front, and also in some of the trade front, will keep gold under sharper focus, and hence may give a decent return. And secondly, the central banks are what they're doing, they're diversifying the reserve in favor of gold and going away from dollar. And there are other things, scarce, more demand, less supply, and all such things that gold actually carries should be part of your portfolio. Our fund will be, normally what people do is equity centric multi assets. Our will be gold centric multi assets.
I see.
That means we'll first decide how much it go to gold, remaining will distribute. Why? I don't have figure, but in if you see the 50 years, more than 40 years analysis, earlier we were telling gold can also be a good asset class. We are telling gold has proven to be even a better asset class than equity in terms of offering long-term better CAGR and lesser volatility. So gold should be part of your asset class at least for coming next few years, 3-5 years. So that's why we thought this is the right time to launch multi-assets, and people's portfolio should have some portion as multi-asset. And as people grow, the near retirees, they should come to this is a balance point. People wanted always hybrid or balancing their portfolio by way of multiple things, hybrid advantage or BAF and other things. Here more asset class and is also balancing, and instead of sticking to an 65% of equity for the tax purposes only, then you better go to full equity. Why
Yeah.
map? So our map will be differentiated by not maintaining 65%. We will be focusing on the precious metals, and of course REIT is an equity class now. The REIT also will be, REITs also will be there, and debt and equity also will contribute to this asset class. There is a demand also in the market for this product. It's a good product for SIPs. And you may be knowing that in the jewelry shops, and big and small in your neighborhood jewelry shops, they are also accepting money in SIP manner monthly for just buying gold at the end of 1 year, 2 year, 3 year. And the money is going in money terms, and after the end only that is being converted to gold. And that is other impurities, other cost factors involved, your making charges and all these things, the chance of theft and buggery in physical gold. Keep some amount of gold in your overall portfolios with equity and savings, with equity and debt. That will be better options. We thought Indian investors will accept this. They have proven by giving money to the other AMCs in this category. I think it's the right category to win right time.
Sure. And any thought of taking an exposure in international equities if the opportunity comes by?
Provision is there, but we are not finding right now.
Sure. Okay. The provision is available.
Yeah.
Sure. Now, quite a unique one because जैसे आपने बताया that it will be more gold oriented, etc. And yeah, so it's a good way to have a multi-asset fund.
Yeah.
What other products are in plan to be launched?
We are planning also in gold ETF.
Mm.
and FOF. Silver ETF is also in the plan, and a
Okay.
small cap fund.
Mm.
These what we are prepared these things, and we'll be preparing our strategy, and our challenge is quickly go to market with
Mm.
product baskets which are demanded, which are investor friendly, which will fit into the risk profile of the standard investors. Those things will do fast, will not take time, will not wait for bringing a product with multi-thousand crore collection. Will fast get the product, show performances, then change mobilization. That will be our strategy.
Sure, sure. What have been the distribution strategies, Debashish ji, which you have implemented, and how do you see them going ahead? The distribution strategies or the new initiatives which
Yes,
have been
yes, yes.
taken.
Yes, so we are believer of coexistence of multiple strategies, but as a fund house, we are focusing on distribution-led strategy,
Mm.
and for that, we are empanelling MFDs. We are creating new MFDs. Let me tell
Mm.
you one thing, Suran, and that in this industry, uh, we have limited around 50-60,000 of active distribution out of
Mm.
1,89,000 registered distribution. But in simple comparison with the insurance industry, you know where they are, where we are. Their
Mm.
penetration is high, our penetration is low.
Mm. Mm.
So
Mm.
this recent success that in the last 5 years we have seen 78 lakh crore, this that, still we are 96% of the population are untouched.
Mm.
And if we assume that metros are overcrowded or fully harvested, it's not the case. There
Mm.
are many people in metros also, they are not participating. SIP, okay, that brought in some of the more investors to this thing, but there are more to go. And the creation of MFD, creation, stabilization, training, and then making them full-fledged effective professional has been earlier when UTA was there. It was in their care, I could say, because I belong to that organization for 37 years. I know this thing. Subsequently, it was in nobody's care, no AMC's care to create distribution.
Mm.
It was in some national distributor they attempted, and individually people wanted a profession they created.
Mm.
But it was never a care of any AMC seriously.
Mm. True. Mm.
Even Sandbox project was not successful because people didn't spare energy and focus for
Mm.
that creation of this thing. But wealth company AMC, because it is following a distribution led strategy, if there are shortage, we wanted to create and support the industry
Mm.
for penetration.
Mm. Mm. Mm.
There are RIAs, there are national distributors, there are wealth managers, bankers. But you know, this Padatik Shanani, or the
Mm.
foot soldiers, who
Mm.
knocks 10 persons door every day, talks to 20-30 guys every day, WhatsApp send to 100 guys every day, and meets 2-3 people, and one person in a week succeeded. This converting non-investors to investors, bringing them first time, mostly done by mutual fund distributors. And we want more mutual fund distributors who are knowledgeable, who are trained, who are effective and professional. So we are creating MF Didis, that is lady
Mm.
distributors, and MF Dost is the gentleman distributors.
Mm. Mm.
And India has a lot of educated people, a lot of even technologically sound. They know how digitally very proficient. Numerically also they are very aware. Financial matters, some are aware, some are not aware. So we require detailed training about the financial markets and mutual fund, and they can be able to pass an ISM 5. Thereafter, the challenge starts. How to retain his interest, make
Mm.
him successful. He needs to be an effective salesperson. A sales here in our trade is 99% communication and 1% strategy. Will help this guy in being a better communicator, will even provide the leads generated by our AI, will help him in getting up to fast 5 crore. Even thereafter, he will swim himself and sustain himself. And for that, we have plans to provide mentorship and
Mm.
lots of training. SEBI allows to give from AMC to spend on training.
Hmm.
and in creation of knowledge, skills, and digital skill. So those things we are creating. We are lining up AI training, business intelligence training, and customer intelligence training, and digital intelligence training. We call it AI, BI, CI, and DI. And thereafter, for seniors, also we need to engage. We need to see that somebody who is already joined this course 5 years, 6 years back needs some professional boosting, some training boosting. Let me take this opportunity to announce to the industry for the first time. Nobody, we have not spoken yet elsewhere. This will be breaking news.
Hmm.
We have invested very big sum in creating a training course from Harvard Business School. They call it Managementer. So we'll provide the next gen, or even people who are interested and they are seeking the efficiency and professional excellence for them.
Excellent.
And what will the cost for our MFDs? Zero.
Hmm.
This organization has it's declared that will be distribution focused, really investing good in knowledge, in infrastructure, and providing knowledge from the outside partners.
Hmm. Hmm.
This
Hmm.
is one such thing. Team Advisor Coach will be happy to know that we are sharing with you for the first time. It has
No, no,
not.
absolutely. We are very delighted to hear this breaking news. Excellent. With Howard. Wonderful.
Yes, yes. And
Wonderful.
many of our MFDs, they are knowledge seekers. They're already MBA, they're already CFP, already CFA. This will be as a refresher, what is happening worldwide in the financial intermediation, how they can be better salesmen, how they can be better controller of their HR resources. Lot of things. I'm not. The time will be short to totally giving full details. We will come back on that. But in short, we are creating three levels for very top people, and then middle people, then other people, and different modules which they will get also certified. And this will give them exposure and the network of people with whom they will get trained.
Hmm.
That is also very good. And knowledge resources also will come from them, which other people have discussed, videos, audios, and we'll start it soon. And this is just a contribution to the industry development, the ecosystem development. Like we are creating, giving free training to MF those and MF Didis. Our training also will go with the existing ones who are senior, who need knowledge, and that will be provided by us. This will be our core strategy, distribution strategy. We are
Hmm.
not direct focus. We know there are fund houses who are focusing on direct and digital business. So that is also possible and coexist. But as a fund house, we'll put all our effort in creating a distribution model and improving the existing distributors, and that's it. We will not invest in direct focus things, but as an option, we can't stop that as a service regulation. Our schemes will have direct options also. If somebody voluntarily coming, welcome. But we will change distributors to improve in their professional skills and give up their share of our share of wallet.
Wonderful, wonderful. So very, very distribution focused, generating new distributors like through MFDD and MF those programs. और सबसे अच्छा जो मुझे लगा is about जी education part because that is something which is very important because you educate more and more and that you know empowers them with knowledge.
Let me share with you before you add next sentence is even before we got license, we
Hmm.
started that SIF training we shared with you.
Yes, we did one
SIF,
of the video
wealth,
interviews if you remember.
wealth management,
Hmm.
and 4,000 guys benefited out of that.
Yes, yes,
Our MFD friends.
yes.
Yeah.
No, that was brilliant. That was brilliant. Excellent. Excellent. Really happy to know that very, very distribution led distribution strategies uh, being adopted ahead. Excellent. Uh, Debasish जी briefly अगर आप अपना investment management team का बारे में भी थोड़ा बता पाए and also what are your thoughts on the branch network plans?
Yeah. So I'll come to the branch network one first, then we'll come to the our strength. Uh, See, branch and relationship manager, physical presence, and that network that worked, and that will also work now. But that is time consuming for creating a brick and mortar network.
Hmm.
Number one, the when we call to mm, creating manpower or manning the branches, we need experienced guys. Where
Hmm.
from the experienced guys will come? They
Hmm.
can come from the industry.
Hmm.
And what is the normal practices here? You have notice periods, you take interviews, a lot of time.
It's
So
about a 5 months process.
5 month process. And
Hmm.
what we have, what strategies? First, launch the products and grow them later.
Hmm.
Okay. So parallelly, this can come. We have already started
Hmm.
choosing right people. You see, like what, when, why. All these questions are important for strategies or for growth. Who
Hmm.
is also very important. Who is going to manage? Who is
Hmm.
with that person?
Hmm.
So that is a challenge. We have shortage of good people in the industry, and there are
Hmm.
top people. There are 45 companies, and we are the 51st, and there are other
Hmm.
companies coming up. So
Hmm.
everybody will have demand of these people, and people who are existing fund houses may not be able to leave them. So there will be a talent gap for some time.
Yes.
That is
Yes.
one. So it will take time, and we are ready to have the patience for that. Second, the traditional role of the relationship manager
Hmm.
have gone through changes. It has evolved into a different shape.
It has. It has.
What the relationship manager traditionally was doing, providing information, majorly.
Hmm.
What is my pricing? What the product features are? When it is going to be launched? Second is service.
Hmm.
My client did this, I didn't receive this
Hmm.
thing, what I can do. So remedial actions. Third, building relationship because of personal, because relationship matters. We are human beings. So out of these three things, two things technology has taken over. Information is reaching much better than through a relationship manager sharing the information. And second, service and transactions, everything touch of a button from centrally this can be done. So from a tree to the branch, that you told branches, so tree can itself handle a lot of transaction related and information sharing related job.
Yes.
What remains is human relations.
Hmm.
Okay,
Hmm.
we will have that, but it's also limitations that we have now selected leaders who are seasoned, who have got deep industry experience, and we have posted them at places which are of bigger cities. Okay, we have not posted people under them or in the other cities because that is taking time. We have got around 100 management trainees we have taken from campuses, but
Okay.
they're raw, fresh, lot of energy, but they're absolutely
Hmm.
fresh and untrained. They
Sure.
will take time to come up as a relationship manager. We have posted them at various places, and till that time, the relationship manager is Debasish Mohanty and Madhulu now.
Excellent. Excellent. And something on the investment management team?
Yeah. So we have hired same criteria we have kept. They have to be seasoned,
Hmm.
and they must have seen multiple cycles,
Hmm.
must have seen ups and downs, and still uh, be under quartile one and two. Their average performance has to be
Hmm.
quartile two type of thing, quartile one and two. Second, one additional criteria this fund house has employed. Let me tell you, since there is nothing in something that we will not be transparency about. So our strategy was also to do a background check,
Hmm.
and the priority criteria is integrity.
Hmm.
So people are there, but we checked for 20 years, 30 years, and there are system you can check that way. And what we are focusing not on how many degrees he or she has gathered, but what was his life so far, whether it is events were there or it was very honest and integrated lifestyle he was maintaining. So with
Hmm.
that criteria, we have already got Aparna Sankar from SBI Mutual Fund,
Hmm.
and then we have got Umesh Sharma from Franklin Templeton, and we have there are other junior fund managers are there, and also an analyst are there, and our Prasanna Pathak, who was Taurus CEO, and also he was fund managers at UTI and some insurance companies and other mutual fund companies. So they are very experienced. All have 25, 30 years of experience holders. And we have also set up analysts and junior fund manager having 5, 6 years of experience in the market. And they're also there. So total team already reached, the fund manager team is 7, and
Mm-hmm.
if you add analyst, then it will be 12. And in addition to that, our group company are also having a separate team of equity analysts,
Mm-hmm.
Asit C. Mehta. So their reports and inputs are also available to us. And we have got AI based studies, that is also available to fund managers. We also have a third party agency backtest all our strategy or the methods or the algorithms that we think to use. For example, this math will use some formula to change. One is deciding about the initial proportion and which the funds will be allocated to multiple asset classes.
Sure.
Second, reviewing and rebalancing and changing because there are triggers in the market that
Mm-hmm.
equity is going to do better or debt is going to have changes like that. So when that trigger happens, what should be the parameter, and on that trigger how much person should change? It's not random. Fund managers eyes will be there, but the intelligence that coming from technology also will determine that what time we should change. But how this will work, that we have got it back tested again for 20 years data, not by our own analyst team. We have given it to third party to validate. You see whether we are on the right track or not. If we are
Sure.
not right track, what should be the right track? How
Sure.
many iterations after we have got satisfied that that will work. In FlexiCap also we did that. FlexiCap we told we will have a stand, that will take, that it will be always a true to level fund. If for
Mm.
flexibility people have given us money, we will be flexible rather than sticking to one large cap big assets and holding on to that just
Sure.
because my
Sure.
index will give me return. So with that we wanted, if a different cap required to be invested better, we'll change it, and agility will be proven, and we'll take help of again our strategy with the back testing satisfied. Here same allocations of different assets in different proportion has been back tested, and that fund managers get confidence out of that.
Sure. Sure. That's really good. That's really good. So today, through this in conversation, Debasish ji, what message would you like to give to all our viewers on behalf of the Wealth Company Mutual Fund?
Yeah, two things. As I told you that we will focus on integrity, distribution led sales strategy, and also two unique features of this particular group I would like to highlight. One was the private equity approach based rigor to
Hmm.
public fund management.
Hmm. Hmm.
So you may select your parameters may point out that bottom up or top down that this particular stock we can invest.
Hmm.
Just because numbers say so, before investment there are rigor required. One was background check of the promoter. Second, company visits and meeting people who manage.
Hmm.
And large cap doesn't matter because those companies must have been visited already and reports have been
Hmm.
collected. But
Hmm.
mid and small, this require this additional rigor of the fund house, that we will check the background of promoter and meet people at their place to know more, and we'll tell offline what is those, how we are doing this thing using what technology and what all these things. But
Hmm.
those things are done. And second thing, what people can look forward for from us is that very stringent criteria KRA of fund managers performance will be there. We
Hmm.
believe, like as in the restaurant, the taste of the food is key for the sustainability of the business. The return is that parameter which is required for sustainability
Hmm.
of our business. We'll be focusing on that. And simultaneously we'll also see what innovation and other products that can be launched. For example, ethical fund was launched with a twist that it will be ahimsa led, that is non-violence based, no animal killing and no harm to ecology. That focus also we are bringing, and we have promised that the profit made out of this ethical fund, 50% of that will be flowed back to the society for betterment of this thing. So that is one philosophy that we believe, and we are doing this thing. We'll launch products, and thereafter will grow. We'll take care of service of the people, and you can look forward from us a clean, transparent, young organization which will do the service, but young, but managed by experienced and seasoned people.
Absolutely.
And one more thing I will tell, that normally 10 years back there was reservations for NFO, because higher upfront was allowed and this NFO cost was going into that. Now NFO and old funds expenditure ratio TRs are similar, only your size will matter, determine what type of cost you can charge. So that hesitation from TR region is no longer there. Second thing, new and old. Actually, I question what is new. The fund categories and fund structures and the regulatory requirement and guidelines all equal and all same. It is well regulated by the board of securities board, SEBI, and it is nothing different. The new will follow the same rule, the old will follow the same rule. Fund managers are not new. They have experience in other fund houses and brought here. Products are not new, fund managers not new, the processes are not new. What is new? New is the fund house license is new, the passion and energy is new. All those things are old. So, like people tell you, you are new, hence you will not invest or hesitate. That has to be thrown out.
Correct.
That is a myth. दाग अच्छा है, new भी अच्छा है. Okay. In fact, new guys have lot of more stake to win in the battlefield, so they will give their best within the same rules of the game to show better performance, probability wise.
Very true. Very true.
So they should also accept and accommodate the new one. Whatever criteria they use to select an old fund, same thing should be used for the selecting of new funds. Just because something is new should not be discarded.
Sure. Absolutely. No, very well summed it up. Very well summed it up. So, well, for our viewers, this is Mr. Debasish Mohanty, Chief Strategy Officer with the Wealth Company Mutual Fund, taking us through, the plans ahead, the distribution strategies integrated now and going ahead for the Wealth Company Mutual Fund, and the new fund offer, the Wealth Company Multi-Asset Allocation Fund, being launched on the 19th November and closing on the 3rd of December 2025. So Debashish ji, बहुत shukriya. Thank you very much for joining in today and taking out time.
Thank you.
And being with us. Thank you so much.
Thank you, Siran. Thank you, the audience.
Thank you.